Hey, and welcome to Let's Talk Money. Thanks for tuning in again. I am Money T.
And I am Simply C.
So last week we had the Johnson and Curry tax ladies on, dropping more nuggets. I think Simply had to
I had at least five nuggets.
4 or 5
4
nuggets.
or 5 nuggets.
From last week's show, which was really good. And the only thing I'm going to hit on is when you guys get those stimulus checks for your children.
Them stimmies.
How about opening up a Unified Gift to Minors Act? Give them a future.
Yep.
Invest.
Open up that account and let that money grow for them.
Yes.
Them babies.
Definitely.
They want to go to college.
Yeah.
Yes.
Or buy a car or whatever.
Whatever.
You know. So we have a special guest today. Go ahead, Simply introduce.
Yes, we have the infamous, the Otis Watson, the community's banker, as he pumps himself.
Yes.
Welcome. Hey, why don't you tell the audience a little about yourself?
Well, thank you, ladies. I appreciate the opportunity to be here. But yes, as Simply C said, I am Theodis Watson with the Community's Banker, as I call myself. I am also the Western Region Vice President of an awesome organization called Urban Financial Services Coalition. But the reason why I call myself the Community's Banker is because, one, it's a passion to serve. I feel it's my responsibility. Being in the industry for 20 plus years, it is my responsibility to make sure I provide that knowledge and resources to our community. But I had the privilege to serve the low to moderate income areas and also one of the wealthiest areas in Kansas City. And it's an honor to be able to serve both of those environments. And I feel like it's my responsibility to do that. So I appreciate you all allowing me to be here to share my knowledge.
I love that. My favorite word is serve.
Yeah.
Service. I love people who want to serve the community. So today we are here to talk about small business lending and PPP, that Payment Protection Program.
Yes.
Tell us, what is that all about? What is PPP?
So PPP is the Paycheck Protection Program, which is a loan that was originated through the Coronavirus Aid Relief Act, and which is formerly called the CARES Act. But it was originally a $380 billion program. And yes, I said billion dollar program intended to provide Americans, specifically small businesses, with 8 weeks of cash flow funding and assistance to help them with providing funding for their employees. And it is 100% federally funded. This program is a part of the Health Act that was originated by the previous administration.
Couldn't even say it.
I couldn't do it.
Even say it.
My tongue wouldn't even allow me to do that. But as you all know, it's now round 3 is what they call it. And the round 3 program is it was allocated $284 billion for these funds to be allocated to small businesses. And if you do what you need to do right, and which we'll talk about it, it will be 100% forgiven. So billions with the B.
Billions out there available for small business owners, right?
Correct.
And 100% forgiven.
100% forgiven if you do what you need to do with it. If you do what you're supposed to do. Yes.
Wow.
So let's get in what we're supposed to do.
Man, I know. I honestly, first of all, I want to give credit to all the bankers out there and community folks and financial service industries, because a lot of them have been working a lot of time and hours into the program. Sometimes many hours in the late night. So kudos to all the financial professionals out there who spent some time. But let's get into it. So what is it? How do you apply? How are you eligible? So this was round 3. And so the first round, and called the first draw for first time PPP borrowers, there is to qualify, you have to have at least 500 or fewer employees to be employed for this organization, or to be employed for this to qualify for this program. Either sole proprietors, independent contractors are eligible if you're self-employed. non-for-profit organizations, including churches, are eligible to apply. And so if you fit within that, which 99.9% of the organizations in the community, they qualify for this program.
So is that 500? You could have one employee and qualify.
Correct.
Okay.
And 1 employee to 500 employees. As long as you're not a privately held company, you will not. You can qualify, and as long as you don't have 500 or more employees, you can qualify for this program.
That's what's up. So how do churches, apply or qualify for that? So because it's a job.
I mean,
some
they have
people do
employees.
operate it as a business, I guess.
Yeah, some churches do have employees.
They have payrolls.
Mhm,
They have
they do.
payroll. They have staff. The pastor sometimes is the only employee at times. I've seen that. But yeah, churches apply, nonprofits. We have chambers now. They did not qualify in the beginning, but there are some, chambers who are business associations. They can now apply for the program. So anyone who has any payroll expenses or employees, they can qualify for this program.
So what's the first thing they need to do to apply? Like, where do they need to go?
First of all, I would say contact your bank or financial institution, credit union, contact them. The program has been extended through May 31st. Mm-hmm. So if you haven't gotten into the program, I would highly and strongly encourage you to go to it now. If you have not, or if you do not have a relationship with a particular financial institution or credit union, I would encourage you to reach out to some small business development centers in your local community. There's some business associations who can point you in the right direction, but you definitely need to apply for this program because it is geared towards the small business. Yeah. So what do you need to qualify? So we'll start off with, if you have employees, you will need to have your payroll tax filing records. So what I mean by that is if you have employees, normally you will provide 941s or annual 940 to show what you've paid in payroll expenses. Some people may have W-3s. That is something that you can take to your bank to apply. There is also, if you were a contractor, a Form 1099. Contractors know what those are. Encourage you to take that. Have those documents ready to go for your institution. Schedule C bars. So there's a lot of individuals, like you said, if you had one employee or if you're the only employee, you may file your taxes on a Schedule C as a sole proprietor or independent contractor. We need that form in order to qualify for that program. And of course, if you're in an ownership or a partnership, a Schedule K. So individuals who are familiar with that, take your Schedule C along with the application for to qualify and apply for the PPP loans. So
you can qualify if you yourself are the only employee.
One employee, although you may not have 3 or 4 employees. Mm-hmm. Yeah, you can be the only employee. Normally, you will file you will report your earnings or your wages on a Schedule C. That's what you will use as your document to bring to the bank to acknowledge what you qualify for.
That's what's up.
Absolutely. So again, in order to qualify for this program, there's an application online. Go to the SBA.gov website. There's plenty of information out there that talks about what is available. The application is there. It's a fillable document. You can do it on your phone. You can do it online. I strongly encourage you to do that. And secondly, provide your financial documents, either the 941s or the Schedule Cs, to your respective financial institution, and they should be able to walk you through that. I will say some financial institutions may have other requirements, meaning maybe they may have a checklist or some type of other document just to, banks do have the flexibility to provide their own resources, but pretty much as long as you have your payroll records in your application, you can qualify for that program. And you apply, and sometimes it does take about a week or so to respond. I will let you know that the SBA is significantly understaffed. There's a lot going on, so be patient with your financial institution, but for the most part, they can still get you taken care of.
So how much of a loan can a person get? Like, or does that determine based on the business or their credit, or how does that work?
Good question. So I'm going to backtrack. I'm going to start with the Schedule C. So originally in the first draw, which it started in last year around February or March of 2020, for Schedule C borrowers, the amount that they qualify for was whatever's on that net income, that line 31 on your Schedule C. That was the amount that you qualify for. So you will look at that number, divide it by 12, multiply that by 2.5, which they said that 2.5 reflects at least 2 months worth of payroll expenses. That way you will qualify and say, hey, this is how much you qualify for. So it's a payroll expense program. So this money is not for you to go out and buy a new car, buy Bentleys, which I heard, but it is to help feed families, who either are employed with you or for yourself. Now, for those 941s or individuals who have multiple employees, what we'll look at is, let's say a 941, you usually report quarterly 941s to show what your wages you spent on your employees. Mm-hmm. We look at your average monthly payroll for the year, divide that by 12, multiply that by 2.5, and that will be your max loan amount. And that's what you would qualify for that. The max amount for your first draw was $10 million. Right. And so I know you all heard about the Lakers getting their money and all of that, which is kind of crazy. I love the Lakers. I love you, LeBron, but I don't know this program was for the Lakers. But anyway, but the max amount was $10 million. But for the second draw, because individuals who may have applied for the first draw, they can now go back and get a second draw. So you can get 2 chances at this, but the max amount for that is $2 million. So those are some opportunities for small businesses who may have been able to weather the storm the first round, may need a little bit of assistance for the second time, and they can qualify for the second draw.
So is that who gets to it first? In
the beginning, yes. I mean, absolutely. I mean, when they first rolled this money out, it was, a couple $100 million was gone in about 2 weeks. And trust me, those conversations was tough talking to those customers. However, now the government put a little bit more systems in place. They kind of, did their background and kind of checked individuals. And again, sometimes the Lakers weren't able to get the second draw. Thank goodness. I love them to death. I'm not talking down on y'all. But again, it really was geared to really help these small businesses.
Exactly. It's like, really?
Yeah. They had to fund more money for the program, and which was unfortunate, but it is what it is. So
that's crazy.
I know, billions. So for individuals who may go apply, so you may have been out there and already applied for the first draw, and let's say you do want to qualify for the second draw, there is a caveat to that. So you must, if you're going to apply for the second draw, show at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So for an example, you'll want to provide like a profit and loss statement or, some type of financial reporting. Your accountant may have something there to show, hey, what you made in January, February, March of 2019 compared to what you made in January, February, March in 2020. And then as long as it's been a 25% reduction or more, you can qualify for the program. So I know banks that did $3,000 the first time and worth of 3,000 loans the first time. And then the second round, they may did like, 1,000 or 1,500 because not everybody qualified for that second round. Some people made money during the pandemic, which is okay too.
So do you know if banks were lending this money to people who were not their customers?
Yeah.
At first. And because I think when it first started, like the first round or first draw, that we were lending to anybody who qualified. But I think that second draw, it was kind of more narrowed down to our customers to get that money first.
Yeah, because one, there was a lot of fraud out there, as you all read.
Sure.
In the newspaper, there's a lot of opportunists out there getting some of this cash. And so banks, and credit unions, they want to deal with people who they know, and they want to make sure it's getting into the right hands. And what they do not want to do is have the SBA not forgive the loan because the bank may have did something incorrectly or did not check all the boxes. And now they are left on the hook with this 1% loan, because that's what it is.
Yeah,
It's a 1% loan for 5 years. And so you don't, banks were a little skeptical of the program. But I think the second round and third round, they really done a good job of holding banks harmless for this, is what they kept saying, making sure, hey, we had our boxes checked, making sure we had our process in place, and the SBA did what they had to do, again, to make sure this next round of money was flowing to the right folks.
I can see where a lot of the small businesses that really needed it that are probably closed up now.
Oh, yeah.
Because of people that really didn't need it.
Yes.
Got it first.
Yep.
Absolutely. So that's the thing. I've unfortunately had some clients that they got their first draw and they're like, unfortunately, Thales, this is about it. And it's, that's a tough situation. Right. However, it's just one of those things that you have to deal with. But yeah, you're right. Some people, and again, sometimes when that money ran out, they couldn't feed their, pay for their employees.
Right.
And, the employees can, stay home and make $600 extra,
Right.
So they were dealing with it. Because to be honest,
I want to go back, right?
Why would you? You're making more money being
at home?
So yeah, so that's what small businesses were dealing with as well. Not only getting this money, and not only people weren't walking through the doors. Hey, the government's giving their employees extra money to stay home, obviously with the unemployment. And there were some small businesses that their employees were mad because they got the Paycheck Protection Program, because you had to use the money on your employees in order to get it, to get the money and also get it forgiven. And we can talk about forgiveness as well.
That is crazy.
Yeah.
So what happens to the money when a business ended up closing anyway? And so they got the PPP, but life happened and it was not enough to sustain them. So what happens to the loan then?
That's a great question. And that has happened. And so what the borrower had to do was they still had to show proof that they spent the money on payroll.
Okay.
So you still would do that. And if they did not show proof that they spent the money and the business closed, again, that goes back to being a 1% loan for 5 years. And now you have to find a way to make that loan back to the bank, which is it's a cheap loan, obviously, the cheapest you'll ever get. It
sounds yummy to me.
But trust me, banks and the credit unions don't want that loan on the books because it costs them more money, obviously, to keep it on. So, but that has happened. And what we also found out, a lot of businesses were selling their business too. So if you are a business owner that got the money and then you sold within your 8 and 24 week time frame to spend that money, what they had to do typically was, you sold your business, you just put it in the escrow, keep it in the account for, until your loan was forgiven by the SBA. And then what they'll do is release those funds back to the, I guess in that case, the borrower, and they can walk away and everybody is happy.
Can I work for you? We gonna split this.
Right.
Man.
So borrowers had between 8 weeks and 24 weeks to spend this money. As long as you can show proof that you spent that money within that time frame, the loan will be forgiven. And we can talk about that whenever you all are ready.
Yeah, go ahead.
All right.
Well, we ready.
So we can talk about that. So let's say, hey, these sweet C's over here got their PPP loan and everything is good. And so now it's time for forgiveness, and how, do you apply? So there's an application, obviously, on SBA.gov or your bank. I'm sure they do have that as well. In order to be eligible for forgiveness, one, you got to identify and show proof that you maintain your employee and payroll levels. And so you show your payroll records, your 941s, you're good. You can spend the money on they call it the 60-40 rule, right? So at least a minimum of 60% of your loan monies was spent on payroll. So you got 100,000, you spend at least 60,000 on payroll. Perfect. The other 40% can be spent on utilities, lease, rent, now you can use it on PPE equipment. So if you use it to put up dividers within your office, as long as you can show proof that you spent the money the right way, that money would be forgiven. And so again, you will fill out an application. If you had a loan under 150,000, honestly, it's a 1-page application. You submit it to the bank. All you literally do is certify a couple letters and you sign. We send it down to the SBA. A couple weeks later, it's likely to be forgiven. If you don't show proof of that, again, it goes back to that 1% loan for 5 years. But most banks obviously want to make sure that loan is forgiven.
Man, it's kind of like free money.
I mean, it kind of
Yes.
is.
It really is.
It's crazy. I don't think we've ever experienced anything like this
Go
in the
get that money.
country. There's never been anything like it. This is a first. When they first rolled this out, literally, it was, we call it building a plane while it's in the air, because the rules and regulations just kept changing and changing and changing, and applications are changing. And no, we said you can do this, but no, you can't do that. And again, at this time, people are still just sending in applications and, we're giving away money.
And then you have the people that were equipped and knew and had their things in order that really took advantage of it and soared during COVID. And then you have those that collapsed.
Right.
Yeah. And from a lack of knowledge,
Oh,
the biggest part, just didn't know where to start, didn't know what to do. So that's why I really feel like this conversation is really helpful, especially since they extended
yes. Got another 30
the
60
time
days.
frame. Yeah, you got another 30, 60 days to get that money if you are a business owner with employees and you're still struggling or still trying to recover
Right.
from COVID last year, then need to reach out. What was the website?
SBA.gov.
SBA.gov and get that application going.
Yeah. So one of the things I would strongly encourage businesses who has not received those funds, again, technical assistance. You said that paperwork and businesses being ready and prepared. There's a multitude of small business resources out there. We're here in Kansas City. You got the Small Business Development Center on 4747 Trues. You got the Johnson County Community College. There's a Small Business Development Center out there. They got great organizations here locally like the Prospect Business Association, and just really could help you get your paperwork together. And then they have relationships with banks and institutions that they can provide that to you. Because again, once you bring it to the bank and say, hey, I need to get this PPP loan, not everybody have the resources to call and talk with you and walk you through the process. So it's great to have those other resources available for small businesses to get their paperwork together.
That's good.
And so I want to talk real quick about the forgiveness piece again. So as I mentioned, the 150,000, as long as you had a loan under that threshold, it's that 1-page application. You still want to keep your paperwork for at least 6 years, although you're only submitting that application to the bank, just for the simple fact that IRS, SBA, they may come back and try to audit your books. They may, there's a lot of money. It's $384 billion that's been on the streets, right? So they're going to check to make sure, they're not going to catch everybody. But they're going to catch some people, and they've already caught a lot of people. But you want to make sure you have your ducks in a row, your paperwork, keep it for 6 years, just in case if they try to come back and do that. But also, if you have loans over 150,000, you will have to show proof of how you spent that money. So again, the payroll records, the utility bills, the lease payments to your landlord or whatnot. You will need to provide that to the bank so we can verify that you qualify for forgiveness.
Wow. That's a lot of good information there. Anything else you want to touch on before we take this break?
Yeah, absolutely. So for the second draw, everything is the same. You got to show the 60-40 rule. You have to make sure your expenses are eligible, but you also have to show proof that you had that 25% reduction. Banks like myself and my organization, we require that up front. Not all banks did, but you will have to show proof that you have that 25% reduction in gross receipts from the comparable quarters year over year in order to qualify for forgiveness. So again, a lot of banks require that up front like we did, but some banks didn't. So just be prepared for that.
What does a small business owner need to come to you to get a loan? How do we prepare to be approved?
To be approved.
Why? I can't help you with your credit now. That's gonna be that's the first thing. But very, very great question. But first, before I do that, can I throw some statistics out there? I'm a banker, so
we love
we like a little numbers. But talking about small business, 2 out of the 3 net new jobs in U.S. are created by small businesses. The 30 million small businesses in America account for 54% of all U.S. sales. Small businesses provided 55% of all jobs in the U.S. since 1970s.
Wow.
600,000 plus franchise small businesses in the U.S. account for 40% of all retail sales and provide jobs for some 8 million people, which probably has increased since this is data since this is 2018. Notably, 40% of the new entrepreneurs, I think you'll like this, in the U.S. are now women, according to data from Kaufman. And what's more, between 2014 and 2016, the number of women-owned employer firms grew 6%, as noted in recently released SBA report. So that's double the 3% growth rate employer firms owned by men. So women, y'all doing y'all dang on thing. Keep doing it.
Well, yeah.
Girl power.
Yes.
I
and
gotta
Black
give
Girl
y'all the
Magic.
Yes.
I got to give y'all credit. I definitely have to give y'all credit where it's deserved. But to your point, what does a business need in order to get approved? You all probably heard about this. It's the 5 C's of lending, right? So you have character, capacity, collateral, capital, and then conditions. And what we mean by that is character, right? So we want to know, do you have the character? Do you have legal issues? Do you have experience in this business to determine if you qualify? Capacity, ability to repay. So do you have positive tax returns? Do you have, are they done with the CPA in their account? Are they self-prepared? Depending on the size of your business, if you're making a couple $1 million a year, you should not be doing your tax returns self-prepared. And also from a bank of a lender, from eyes from a lender, that can be seen as you may be finagling the numbers a little bit. How accurate are they, right? Collateral. So you're asking for a loan, do the assets that you want to pledge, do they add up to the bank's risk, right? So yeah, you might have a property, but is it worth what you're looking to buy or looking to finance? Capital. Do you have reserves? So it's that what if, right? So you come in asking for a bank, you might have the character and the capacity, but you want to borrow $100,000. We may require 20% down. Do you have 20% or $20,000 to be able to help mitigate the bank's risk and also meet our expectations as far as that down payment? And then lastly, conditions. So this is one that I know I've learned so much about, but is this the right business right now? So are you buying this business has a possibility to grow rather than it's just a good idea? So for an example, restaurants, I love them. I eat them all the time, but is the location right where you're looking at buying this, starting your restaurant? Is there other fish stores, or you have a lot of competition in your area that might be, I said fish stores. Is there a fish store?
Fish market.
I'm hungry, right? I think I'm going to get some fried fish when I leave here, but is this the right business for the right location? Is your competition out there? Again, is it a dwindling industry? Banks look at all of that. And lastly, is there a supply and demand for your business? And, as far as conditions, is your business kind of going out of style, for lack of better words? Or is there some people have a lot of great ideas, but may not even have customers, right? So those are some things that banks will analyze when they are looking to do a loan.
So do you have to have a business plan?
It's best to have it. And it's really for the business owner, really. So the business plan is really to kind of help the business owner know where they're at. But yes, there's going to be bits and pieces from that business plan that the bank will want to know. So for an example, do you have a forecast or projections of your business? In your business plan, do you show that your business and they are attainable, right? So everybody has big goals and big ideas, but are your projections attainable as far as being able to, thrive? Does your projection show that you can cover the debt that you're asking for? So, one of the things that the banks want to make sure is, can you cover our debt and all your other expenses as well, personally and business? Because some people think, it's a business loan. You don't need my personal credit. No, we're going to look at your personal credit, because at the end of the day, is your personal obligations and then this business debt, is that going to be a challenge for the bank? Because if your hot water heater goes out, or if you need a new roof, you're going to pay for that before you pay for the bank. So we got to make sure there's that capacity there to be able to leverage that. So yes, a business plan will be really great to know what you have. And then also we can kind of get a vision for what you're trying to do. And it tells a story, because we have to sell it to someone else, right? We have to sell your business to our underwriters to say, hey, we want to do this loan. So the business plan helps us out a lot.
So, is it a way to build business credit? Is that a such thing, and how?
There is, and that's a great question, because I get asked that a lot when individuals say, "Theodis, I want a loan, I want to borrow some money, but my personal credit is okay, but my business credit is awesome." What does that mean, right? So, business credit is normally for, let's say, you buy widgets from a supplier, right? And so you have this DUNS number everybody uses. The business credit is great for that, because what that tells your suppliers is you pay your bills, they can loan you, and they can sell you these products and give you a 30-day window to pay them back. And yes, you are good for that money. A bank, we're going after the financials. We're looking at your personal credit. We're looking at the collateral and these 5 C's to justify, is this a good loan to loan against. So you asked a little bit about the business plan. Great. We're going to look at 2 years of business and personal tax returns. We want to know, is the business consistently making money? Yes, you might make $1 million a year, but last year you made 3. Oh, so why are you making $3 million now? And this year you're making $1 million. You're still making $1 million, right? But now the trend is kind of going down. Why? We need to know. Is it the suppliers? Is it the business model? Whatever it is, we're going to ask those questions. Businesses need to know about the interim financials that we are looking at. So a profit and loss statement and a balance sheet. Basically, if you're a business owner, you should know what that is. A profit and loss statement is basically how much money you've made, how much, based off all your expenses, what is that net bottom line? And we're going to look at that and knowing where those trends are. Same thing with the balance sheet. How much money do you have? You got all your expenses and all your other items that may be under that. What do you have as far as available cash to the business? And so we're going to ask for those statements to determine, again, is this business a good business to lend to or not? We're going to look at the cash flow again. Do you qualify? I'm not going to get technical, but we like to say most banks want to see a 1.20 debt service. Basically, what they're saying is for every dollar you earn, you have at least $1.20 available after your expenses. So we want to make sure that business is making some money, right? I probably lost a couple people, but that's okay. And I said I didn't want to get technical. I do that all the time. And then we say personal financial statement. What do you have on your personal financial statement? Again, goes back to you individually.
Why? We're talking about my business.
Right. Well, again, do you have that $20,000 to fund this $100,000 loan in the bank? No, I'm gonna borrow from little cousin Jimmy. No, we can't do that because cousin Jimmy may have a loan to you. So now you're paying cousin Jimmy, you're paying the bank. What does that loan look like? Is he charging you 10% for that loan? So you got to have your own kind of capital, build up your own reserves if you're looking for the loan. So that goes back to that capacity that we talked about. Do you have that ability to repay the note?
Yeah. So is it really too, if you can't handle your personal finances, then how can you handle those of the business? So
absolutely.
Yeah.
So it's good to really have that financial statement built up. Just everything on that. So you have your financial statement. And so here's a question. Financial statement and credit.
Yeah.
So if you say your financial statement is awesome.
Yeah.
And say your credit is, we'll say in the
not
600s.
As awesome.
Not good.
Mm-hmm.
So then what?
You know what? It's a lot of gray area in banking if you don't know. So we're going to wonder why is that 600 there? We're going to ask those questions. So be prepared for that. Hey, I got a divorce, whatever the situation is. I had a bad situation with a business partner and I had to use all my credit cards. And now that's why my credit is what it is. We're going to want to know why that is. Now, if your personal financial statement say, hey, you got, a couple $100,000 in cash, you got your IRAs, you got your investments, you own property, you got a lot of collateral. We may be able to live with that. Some banks can live with that because your personal financial statement is strong. Now your credit, why is it in 600s? Okay, this is the situation. Why? we may be able to work with that. Your interest rate may be a little bit higher than what we would do because the risk is there.
Right.
However, we still could possibly do it
Right.
if all the other factors are there, meaning, again, your character, the experience, and your cash flow or your personal financial statement is solid. So although we can't loan against money, against your IRA, we can't really touch that if anything happens, but it's nice to see, if you had some of those things in place, that just tells you that you are, somewhat of a savvy individual, that you got some investments,
some kind of money somewhere.
Yeah.
Yeah.
Okay. I'm
Great
glad
question.
you cleared that up. Yeah.
Oh.
That was good.
Oh, good question. I don't know if that was cynical or was that true. That was good.
Oh no, really?
It was.
Oh, okay,
Just
good.
Good question.
No, it is a good question. And so as we talked about, personal credit is very good. I'll go back to your question about coming in to getting the loan. You should never just walk into a bank and ask for a loan, right? You got to know who your banker is. I encourage all my people, if you don't bank with me, find somebody, call your banker, get to know them, get to know the branch manager in the bank who can introduce you to the commercial person, because a lot of loans are done off a relationship too.
Yeah.
So, grandpa been banking with this bank forever. Now son is taking over and so grandpa already had a relationship with the bank. So the bank may do some things for the son because of the relationship and the strength of the grandpa, right? So relationship with the bank is very important and encourage you to do that. So if you don't have a banker in a small business, you need to find one.
That makes me too think about just training up a child in the way he should go. Like taking your kids to the bank with you so that they can see you interacting and making these transactions and how you handle your money and what to do when you get to the bank and how to talk to that business talk to people too. So that's just training them to just saying grandpa and the kid and the daddy, whatever, just made me think of that. Yeah.
No, it's true. No,
Yeah.
it's the knowing that having that language and having those conversations in the house is very important, especially if you're a business owner. I mean, minority communities, one thing I see challenges, we don't have that transfer of business, to that next generation. And so the more, because the more we talk about it, the more we educate our youth about entrepreneurship and how to have a relationship with the bank, it can really make things thrive. Kicking the table. Sorry.
I don't know why that tickles me.
I don't know.
I'm not the only one who done that.
No.
Maybe I am. Oh, okay.
No, you're not.
Yeah, go ahead.
No,
look,
we just talk about loan types, right? So now you come
Yeah.
to the bank and you ask for a loan. One of the key pieces to that is knowing what kind of loan you need and knowing how much you want. I can't tell you how many times where I had a customer say, "Hey, I want to get a loan." Okay, great. Tell me about your business. Oh, they can spit it out. Tell me about your, how kind of revenues. They can spit it out. So how much you need? You know what deals? I don't know yet. How much you think I qualify for? How am I supposed to know how much you need out of your business? Right.
Yes.
And I had to go back to, I'm like, hold on, out of your business. Right?
Yeah.
So understanding, how much you need, if you're buying a piece of equipment, if you're needing a line of credit because, hey, you're working on this contract and you need to pay X, Y, Z expenses and you just need this line of credit to kind of help you get through that until you get your contract money back, and then you can pay it off and you're moving forward. So there's an acquisition loan. So there might be a situation where you're looking to buy a business. That's we have those type of loans. We have a commercial real estate loan. Obviously, if you're looking to buy a piece of property or buy a property. Equipment loan, looking to buy a backhoe or a heavy piece of equipment. Looking at refinancing existing terms. So right now, small businesses, if you have a loan out there, you've been having it for about 5 years, might be a time to refi. Rates are low. Go to another bank.
Yeah.
That could be an opportunity to refinance that at a lower interest rate. And then vehicle loans, lines of credits, revolving credits. Obviously, those are ways that you can leverage your business. And then lastly, I tell all small businesses, establish yourself with a business credit card with your bank or some institution, because that's one way of just a real unsecured, light way of building credit for yourself and the business. And you can help with cash flows for monthly cash flows for, gas, taking your client out to eat or whatever the case may be. So you can establish that credit with your financial institution. So they know what your payment history is, so when you do come back and buy the commercial loan, they know that you can pay for that loan because of your past history.
So did I hear you say like get a business credit card at your bank?
Yeah, or credit union.
I mean, because we have one, and I just find it so much easier to track everything when it comes time to do your taxes.
Absolutely.
But I like the idea of having it at your financial institution because they can see your pay history. So
Absolutely. Yeah. And again, it's just another way of developing that relationship. It's again building that relationship with your institution. So, again, we know what your payment history is. We know who you are from a credit side. We know what your credit score is. Mm-hmm. We got your credit card already. So to your point, yeah, it's a great way of just establishing that relationship with your bank or credit union. I keep saying bank, but credit union as well.
Mm-hmm. Your financial institution.
There we go. Yeah. That's what we're going to start saying.
Financial institution.
That's right.
So I think we had a question too, just about what determines how much you can borrow. Mm-hmm. And do you have to explain what you're using those funds for when it's just a commercial loan?
Yes. Absolutely. And when you go ahead. So I thought she gave me that look like, all right, it's my turn to talk now. Okay. But no, one of the things I encourage you say, okay, so you got your packet ready to go, you got your financial statements, or you had that conversation and the banker said, hey, these are the things that you need to bring them to me. When you come back to the bank, make sure you got everything in that packet because it's so important to bring a completed packet to the bank so we can go ahead and work through that file. So if you bring in me hit and misses of, okay, you got me application here and you're missing the personal financial statement, but you gave me 1 year tax returns when I asked for 3. It's so important to make sure you have that packet because time is money in banks, right? Mm-hmm. Time is money to that banker. And so we encourage you to have your completed packet together. Or if you unsure, ask questions. We love questions. And don't feel, and that's one of the things that I hear is people don't want to, entrepreneurs are smart. They have the energy, they have the drive, but sometimes they don't want to ask questions. They don't want to feel like they don't know the answer. And that's something I'm like, no, we love the questions because that's the only way you're going to get to what you need to go. And we love answering you because when you bring us a packet, we want to make sure it's complete, it's good. We can do our analysis and get you back an answer, yay or nay. And if it's a nay, we need to let you know why it was a nay. But if it's yay, hey, you got a new loan, you're building your business or buying that truck, and now we're on. So just, again, the preparation piece is very important, and the onus should be on a small business, and we encourage the small business to again, prepare for that.
Right, because the ones that are complete are the ones that's going to start going through the process sooner. So by not having all of your duckies in a row, you're slowing down the process and not getting your money as soon as you probably need it. So we want to be ready. Yeah. Do you guys just like supply a list? Is that like on a website or anything, or would they just get it after they talk to you?
So when they say, hey, Theodis, I'm looking for a loan, I typically send them a checklist of items that we need. Your bank should do that. If they don't do it,
come see Theodis.
Hey, come see me. Hey, look me up. Hey, but you know what? I will say, and I love my industry. I love the financial service industry, but I know we have not historically been good to, obviously, the minority community. There's just numbers. It just goes on. However, the onus is not just on the banks, it's also on the entrepreneurs and the customers. But again, we should, as financial service representatives, we should provide you with a list or the details. Say, hey, bring me X, Y, and Z. Bring us X, Y, and Z, not ABC. And we can get that moving forward. And again, hopefully we can get you that loan.
That is awesome information. This has definitely been nugget after nugget after nugget. And I hope people go out there and try to apply for that PPP because I want that money to come to you. I want that money. I want that money to get out there to some of us.
To these small businesses.
Right. And to especially minority businesses that could use that money.
Absolutely.
You want to tell people how to get in contact you? Should they need help?
Yeah, so I would say, reach out to me on, the only thing I have is LinkedIn. So I'm going to say LinkedIn, Theodis Watson, LinkedIn, look me up, the Communities Banker, love to connect with you. Again, it's my passion to do that. And then just real quick, I want to talk real small about the EIDL. So there's Emergency Injury Disaster Loan Program in condition with the PPP program, which is a direct funded loan to the SBA. It's a 3.75 interest rate for a 30-year fixed term loan. It's not forgivable, but it can help you do what you need to do. And then for nonprofits, it's 2.75% interest rate on a 30-year fix. But yes, come see me. Look me up on LinkedIn. I'd love to educate you and get you what you need.
He wants y'all to have that money.
Get it.
Yeah.
I mean,
I
Go
want y'all
get
to
it.
have it too.
It's out there.
So, guys, thanks for joining us. You've been listening to Let's Talk Money. I am Simply C. You can find me on Facebook and Instagram at Simply Custom Wood Designs. You can also find me on Facebook at Simply Cupcakes, and then check out the website Advocating Daughters.
And you can find me on social media on Facebook and IG. I am a travel advisor, pricelessdestinations.com. Oh, sorry. Priceless dash. Put the dash in there.
Dash in there.
Destinations.com. I have a travel store and an ultimate packing list that is so the bomb. You need to check it out. Also, I have a budgeting 1.0 course. It's only 35 minutes. Go at your own pace. It's something to jumpstart, to kick off that road to financial freedom.
And then you can always find us at Let's Talk Money on Facebook. Listen to us every Monday on the 8th.
That's 8 a.m. and 8 p.m. Central Standard Time.
We are out.
We out.